What's going on, everybody? Welcome to 2021. I'm officially back from a extended break from making videos, but today we're going to start off the year with a good one, which is how to get filled on your trades. So this is a topic that I see beginner traders struggling with all the time, and even people that have experience trading, sometimes they don't understand why a trade is not getting filled. So today we're going to walk through a basic strategy and approach for getting better fills on your options trades. We're also going to take a look at a real trade that I made recently in Tesla, and we're going to look at the real-time adjustments that I made to my order because I had to make a few adjustments to the order to actually get filled on that particular trade. So we'll go through that a little bit later in this video. Before talking about a basic strategy that you can use to fill your options trades, we need to first start with the most basic components of actually trading options and getting good fills on our options trades. So the first piece of advice I have for you is to trade liquid options. And that means options that are actively traded with a lot of people transacting in those options, because if you stick to options where there's a lot of trading activity, it's going to be much easier to enter and exit positions in those options. A lot of times when somebody emails me or messages me and they say that they're having trouble getting filled on a trade, a lot of times they are trading stocks with options that don't have a lot of trading volume, and therefore without a lot of people transacting in those options, it's obviously going to be very hard to get filled on any trades that you try to make in those stocks. So the first thing that you need to be aware of when trading options is that to easily fill your trades, you need to make sure that you're in a large marketplace, meaning that you're trading a stock with options that has a lot of trading activity in those options. So the first step is to stick to stocks that have options with a large marketplace, meaning that there's a lot of trading activity in that particular stock's options. And if you follow that rule, you will have a much better time filling your options trades going forward. There are a few specific things that you can look at to quickly determine whether or not a stock's options are actively traded. The first thing is open interest, which is basically the total number of option contracts that are currently open between two parties, meaning that there's existing positions in those particular option contracts. So if a stock has a option with an open interest of 50,000, that means that there are 50,000 of those option contracts that are currently open, meaning that people have existing positions in those options. The next thing you can look at is the bid-ask spread, and this is the difference between the bid price and the ask price for a particular option. Typically, the more narrow the bid-ask spread is, that means that there is a lot of trading activity that is keeping those option prices narrow, meaning that the difference between the buy price and the sell price is very narrow because people are very actively trading those options, and naturally the competition from the buyers and sellers is driving the bid-ask spread to a lower margin. But sometimes the bid-ask spread isn't entirely indicative of a liquid option, because on higher price stocks, which have more expensive options, it's completely normal to see options with much wider bid-ask spreads, which we'll talk about in just a minute. The third thing you can look at is, of course, volume, which is the total number of option contracts that have traded on a particular trading day. I mentioned volume last because if you're trading options early in the trading day, volume resets at 0 every single day and accrues throughout the trading day as more trades are made. So if you're trading a stock's options early in the morning, volume will be really low because there hasn't been a lot of time yet in that trading day, and therefore the volume or the amount of transactions that have happened in those options could be low. So volume is really only a good indicator if you're well into the trading day, because then you can actually tell which options are trading hands very frequently throughout that trading day. But if it is early in the trading day, or if it is right at the opening bell, then volume will start at 0 and therefore be very low, and that may be a misleading indicator when trying to figure out whether or not a stock's options are liquid. So let's go ahead and take a look at some real options using the Tastyworks trading platform, and I will walk through the points that I just mentioned, and we will do so by using real option contracts that are currently trading in the market. So the first stock that we're going to look at is AMD, which is Advanced Micro Devices. And for this example, we're going to look at the January 2021 expiration cycle, which is the closest standard monthly expiration cycle that is currently available. So if I open up the January 2021 options, I'm going to close up some strikes. And the first thing I want to look at is open interest. So as we can see here, if we look at the strike prices that we have available, we can go from 87.5 to 97. If we go to the call section and we look at the open interest, we can see that there are numerous strike prices with open interest in the thousands. Now this is a really good indicator that these options are heavily traded and are therefore good candidates for trading options. If we go over to the put side, we can see the exact same thing as we see multiple strike prices with open interest in the thousands. Typically, the more round number strike prices will have more trading activity. So if we look at the 95 call and put, we can see that the 95 call has open interest of 18,000 and volume today of 4.3 thousand. If we go to the put side, we can see that the open interest is 8,000. If we look at a more obscure strike like the 90.5 strike, if we go to the calls, we can see that the 90.5 call only has open interest of 66 contracts and volume of 100. And the same is true on the put side, as we can see that the open interest is 300 and the volume is 348. So typically when you're looking at more round number strikes, those are going to have more activity in the trading. And for that reason, I like to trade round number strikes whenever I construct option strategies. So if I wanted to trade AMD here, I would probably not trade the 90.5 strike. I would opt for the 90 strike or the 91, whatever makes sense for my strategy, but I will choose the strike prices according to the open interest and the liquidity metrics that we're talking about here. So AMD is a good stock to trade. So let's go to something a little bit different. Let's go to MSTR, which is MicroStrategy. This is a bit of a different stock, and if we look at the options, let's go ahead and open up the January 2021 options. And as we can see here, the open interest for the call options at basically every strike price is less than 1,000. If we go to the put side, we see that the open interest is only in the hundreds, and this is an indication that these options are not very actively traded. Now, if we look at the bid-ask spreads, meaning the difference between the bid price and the ask price, let's go ahead and look at the 420 call option. So the 420 call option has a bid price of 25 and an ask price of 28. So this is a $3 difference between the bid price and the ask price, and that is fairly wide. So if I wanted to trade this option, I basically have to figure out a price between 25 and 28 to trade, which is a $300 range when we're talking about the actual value of that $3 price difference. So for that reason, I would highly recommend trading stocks that have a little bit more trading activity and narrower bid-ask spreads, because you will have a much better time filling your trades. So in these last two examples, we looked at one stock, which was AMD, and we saw that AMD's options were liquid enough to trade without any problems, and the bid-ask spreads were fairly narrow. We then looked at a stock with much less liquid options, which was MicroStrategy, and we saw that the open interest and volume in MicroStrategy's options were far lower than that of AMD's, and we also saw that the bid-ask spread in MicroStrategy's options was also much wider, which makes it much more difficult to get filled on your trades, particularly at a good price. So now let's move forward and talk about a basic strategy that you can use to fill your options trades. So let's start with buying an option position, which means you are buying a call or put by themselves, or you are buying a call spread or put spread. When you are buying an option strategy, basically if the bid-ask spread is very narrow, say a few pennies, then really you should just try to fill that trade at the mid price, and more than likely you will get filled at the mid price. And if the bid-ask spread is a little bit wider, that's when things get a little bit more strategic. So when the bid-ask spread is wider and you're trying to buy an option position, then I would recommend trying to buy that position at a price that is lower than the mid price, which is the midpoint between the bid and ask. And then if you don't get filled there after a few minutes or however long you're trying to wait before entering the trade, then you can go ahead and adjust your fill price higher. So if you're buying an option position and the spread of the bid ask is pretty wide, then I would start a little bit lower than the mid price, and then I would work up from there. And the opposite is true if you are selling an option position. If you are selling an option position and the bid-ask spread is fairly wide, then I would try to sell that position slightly higher than the mid price, wait it out a little bit, and then if you don't get filled, then adjust your fill price lower. And that way you can try to discover if you can get filled better than the mid price, since the bid-ask spread is pretty narrow and there's a lot of potential prices that you could get filled at. You're going to try to discover whether or not you can get filled at a price better than the mid price. And if that doesn't work, then you simply adjust your order price towards the mid price. And if you repeat that process enough times, you will eventually get filled. To demonstrate exactly what I mean by this process, let's go through a real trade that I recently made in Tesla, which was rolling up a put option that I owned in Tesla. So basically, I owned a put option in Tesla, and I wanted to roll it up to a higher strike, which means that I wanted to close out my existing put position, and I wanted to establish a new put position, just changing the strike price. So to do that, I sold the old put option, and I purchased a new put option at a higher strike price in the same expiration cycle, and I did that in one transaction. So we're going to watch this replay, and we're going to look at exactly how I went about trading this, and we're going to look at the few adjustments that I made before actually getting filled on this trade. So I'm going to open up the Tesla option position, and the put that I'm going to roll up is the 500 put. So I decided to do this manually through the option chain as opposed to doing it with the quick roll feature on Tastyworks. And since I own the 500 put, the first thing I have to do is set up an order to sell it. So I clicked on purchasing the 600 put, and then I dragged it down to the 650 because I'm just trying to figure out which put I actually want to roll that 500 put up to. And I decided on the 650 put. So the mid price of this roll is 28.30, and as you can see here, I'm reducing that to 28.25, and it just changed again, so I just reduced it a bit more. So I've sent this order, and I tried to do this roll for less than the mid price. So we can see the mid price is 28.15. My limit order is at 28.10, and I'm not getting filled. So I'm going to cancel and replace this order. I'm going to move it up 5 pennies, try it again. And as you can see, I'm not getting filled. The mid price is now 28.25. My limit order is 28.15, and I am not getting filled. So I'll replace it again. I'll move it up another 5 pennies, send the order again. Mid price is 28.26. My limit order for this roll is 28.20. Still not getting filled. But here I'm just waiting to see if the price will come to my order price, and it's not. So I'll replace it again, move it up another 5 pennies, try it again. So the mid price is 28.30. My limit is at 28.25. Still not getting filled. So I think here I am just analyzing the bid-ask spread of those options, and I did get filled right there. So we saw that I just had to make a couple adjustments. I started lower than the mid price, and then I moved up my order price by 5 penny increments after waiting for 10-15 seconds. Usually I don't wait too long before trying to adjust my order because usually I just want to get filled, but I do this process very quickly, and instead of just paying a high price and getting filled instantaneously, I try to get the best price available to me by starting at more favorable than the mid price and then going from there. I hope that demonstration was helpful for you. To recap the basic strategy to get filled on your options trades, it is very simple. So if you're buying an option position, meaning you are paying to enter the trade, I would recommend that you start lower than the mid price and then adjust your price higher towards the mid price if you cannot get filled at those prices. And if you repeat that process enough times, eventually you will discover the price that you can fill that trade at, and you will successfully fill your trade. The opposite is true if you are selling an option position, meaning you are collecting money to exit that trade or enter it. So when you're selling an option position, you're going to want to try to sell it higher than the mid price, and then if you can't get filled at your set price, then you slowly lower it through order adjustments. And if you repeat that process enough times, you will eventually discover the price that you can fill your options trades at. And once again, if you are trading options that have a very narrow bid-ask spread, which is the case on something like SPY or IWM, then typically you can just go right for the mid price and you'll get filled pretty much instantaneously. And if not, then you only need to change your order price by a penny or two, and you can repeat the process, and more than likely you will get filled after one adjustment if you were unable to get filled at that first trade. That's going to do it for this video today. I hope everyone is doing well out there and is having a great start to their 2021. My name is Chris from Project Option, and I will see you very soon in another video.